All right, Accounting 1, let's do our last section in Chapter 6 today, which is journalizing and posting our adjusting entries. So, as we scroll down here, you're going to see in our Question Assets tabs that we have our completed worksheet, which we did during 6.1, 6.2, and 6.3, all in there. And then we also have our chart of accounts in case you need to reference anything there. So it says, on April 30th of the current year, Fix It Now has completed the worksheet shown in the question assets. We now need to journalize the adjusting entries using page 8 of our journal. So as I mentioned in the lecture, a couple of things that I want to point out. Our worksheet, remember, is just a planning tool. The worksheet is not actually a permanent record. So once we have completed and gotten all the information off of this, the worksheet essentially gets shredded or thrown away. So if we do not journalize and post our adjusting entries, there would be no record of them anywhere. So it is critical that once you've finished your worksheet, that you journalize and post those entries. Now, another thing I want to point out about your journal, it says that we're going to journalize these on page 8. So you can see we have page 8. I also want to point out this little heading right here that gets centered in the first line of the account title. We write the words adjusting entry because adjusting entries do not have a source document. So it is critical. And once again, Applia is being super nice and doing it for you. However, your workbook won't and your test won't. So you will lose points if you do not have that heading. So it is critical that you write the words adjusting entries because that serves as your source document. Okay? So as we scroll down here, our first adjusting entry, remember, was for our supplies account. So it says we use the last day of the month, or April 30th. So we do put April 30, because our first line gets taken up with our adjusting entries heading. But we do need to include the month because otherwise it would just say 30, 30, 30, and we would have no idea what month that is in. Okay, so our first adjusting entry is for supplies. So you have to remember what gets the debit in that transaction, and it is the supplies expense, and then supplies will get the credit. If you forget, you can always go and scroll down in your worksheet, and you'll see down here that supplies expense has the debit of 153. So all we do then is plug in 153 and 153, and we have journalized that adjusting entry. Don't forget that you have two of them, though. We have our insurance as well. So that also happened on the same day, the 30th. And what gets the debit in that transaction is insurance expense for 125. And then prepaid insurance gets credited for 125. So once again, that information is simply coming from the adjustments column of your worksheet. You just are journalizing both of those two debits and credits so that we can post them and bring those accounts up to date. They're up to date on the worksheet, but the worksheet, remember, is not a permanent record. So that's step 1. Let's head over to step 2 where we're going to post those so we get some up-to-date balances in those accounts. So first things first, as we scroll down, we're going to post the adjusting entries. The general ledger accounts do not show all the details for the fiscal period, so they're just saving on some space here. The balance shown in each account is the account's balance before adjusting entries are posted. So first things first, let's look at supplies expense. We'll open that up. And you can see that there's nothing there. If you remember from our trial balance, which they don't show us anymore, but supplies expense didn't have anything, and that's okay, because we're going to put something in it right now. So we go down here and we put April 30th. Our post reference is our journal page number. Now remember, we journalized these on page 8. So that's what needs to go down here, journal page 8. It's a debit for $153, which means supplies expense now has a balance of $153. And our account number 550 goes right up here in the post-reference column. Then we need to do supplies, so we open supplies. Supplies currently has a balance of $228. So on the 30th, we put journal page 8 and we do a credit of $153. So since we're crediting and supplies has a normal debit balance of $228, we take the difference between those two, and if you remember, our up-to-date balance in supplies is $75. So we put a debit of $75, we take our account number, which is $140, and bring that up to show that we posted that amount for supplies. Okay? Then we have insurance expense. On the 30th, we do need the April. We have a debit of $125. Since insurance expense didn't have anything in it, that means it now has a balance of $125 debit. Again, account number 530 goes right up in our post-reference column to show that we have posted that line. And our last one is prepaid insurance. Prepaid insurance already has a balance of $375. So we come down to the second line, we put the 30th, journal page number is 8, and then we are crediting for $125. So we take $375 minus $125 and we get an up-to-date balance. Debit $250, and our account number, which is $150, goes right up here in our post-reference column. So now that we have both a transactional record in our journal and we have updated the balances in our general ledger, we're now ready to proceed to do our financial statements, which we're going to do in Chapter 7. So that is the end of 6.4. Go ahead and head over to do your on your own, your application, and your terms and questions.